All right, cool. We can start. I promise to keep time and this thing. So let's get started. Please, you can stop me to ask any question if you are not. Sorry. If you don't understand something, um, just stop me and then you can ask your question. So, the goal of the today's session and for those in the channel is the idea is to share as much as I can to get most people started on the journey of investing if they want to. And today, just want to introduce you to the stock market so that you understand the dynamics that has to do with the stock market. And those who will be interested in making some passive income can also take advantage of the opportunities available and get involved. So I title it Understanding the Stock Market. Please pause me, stop. You can just raise your hand or just interrupt me and then you ask your question and then I'll do what to explain. All right. So today we would look at these few things and briefly will be out of the way. We'll look at what the stock market is, and then what a stock is. We'll look at what happens when a company goes IPO, and then we'll also look at how do you buy some stock. If you really are interested in entering into the stock market, what do you do or how do you get into it? We'll look at something like that. We also look at understanding how stock prices go up and down. We'll learn how to read, how you can make money in the stock market, and we'll learn how to read stock information, just basic things that you need to know when you want to buy a stock or you want to enroll in the stock market. And then know the stock markets in your country, wherever you are, and then how to use some tools. And then we just briefly talk about some risks and some reward when you are trading the stock market. So quickly, that's it. The first one I want to talk about is what is the stock market? I've shared this before, but I'll go over it again. So there's a place where, so like the way we have normal market, where you go and get some item, you buy something like the Medina market, whatever market it is. There's also a stock market. Now, it can be physical, it can be digital, but there's a place where you go and buy a company. So people who have built successful businesses put up the business for sale. And the idea is that they can raise money. Okay. They do that so that they can get money. And so there's a place regulated by the securities or your government where they put these stocks that you can buy. So that place is where we call the stock market. So when you go to the stock market, you expect to see companies that are being sold. I hope I'm making sense. So a stock market is a place where you can go to buy the ownership of a particular company. So for instance, if you go, you will see companies plenty listed there. It could be a physical space or a digital space where you can see a company and make a purchase of it. So you can see company A and buy some of it or buy all of it. You can see company B and buy it, company C and buy the company. So that's a stock market. I hope I'm making sense here. Now, there are stock markets, because of regulations, different stock markets are managed differently. So there's not just one universal stock market. No, there are different stock markets. For instance, those of us in Ghana, we have the Ghana Stock Exchange. Those of us in New York, we have the New York Stock Exchange. Those of us in London, we have the London Stock Exchange. The same for South Africa, Joburg Stock Exchange. And then Nigeria too has the Nigerian Exchange. I hope I'm making sense. So when you're talking about the stock market, we are just talking about a place where you can go and buy a piece of a company. So think of it like a marketplace for company pieces. So you can go and buy the pieces of the company in those markets or at those places. That's the stock market, as basic as it is. So no one should frighten you about anything. When we say stock market, we are saying where you can go and buy a piece of a company. Please, if you don't understand something, stop me before we build up on it. Now, what's a stock or a share? Now, a stock or share, we use them interchangeably. They are either called stock or they are called shares. So if you are hearing somebody who I'm buying shares, it's also the same as saying I'm buying stock, right? So when you go to the stock market, you go and buy shares or you go and buy stock. Now, a stock is a small unit of ownership in a company. So let's take, for instance, we say Fan Milk, for instance. Now, if Fan Milk is a big company in Ghana and you want to buy a piece of the Fan Milk, so the owners, what they do is that they split. So let's say the company is 1,000 cedis. If the whole Fan Milk is 1,000 cedis in value, what they will do is that they'll split that 1,000 into smaller pieces and allocate this stock that we are talking about, or this share to it. So they can say that, so they will value the company, and then at the end they will say that maybe they can say one stock is 1 cedi. If one stock is 1 cedi, then it means that for the 1,000 valuation, perhaps how many stocks would there be in that 1,000 cedis valuation? So if you want to buy some, you buy a unit of the company. Now, when you do that, it means you are indirectly a part of the company. So if you buy stock or share in Fan Milk, it means you own a piece of Fan Milk. All right. Now, you do by buying that piece on the stock market. Now, it's not every company that's available on the stock market. You can only own a company that has gone IPO that on the stock market. So that's why if you go to the stock market, you are not finding all the companies that you know of. You're only finding some of them, because not every company qualifies to be on the stock market. Now, it's a public space, so there are rules that are governing it. So before a company qualifies, there are some rules they must follow before they are available on the stock market. Now, what does it take for a company to be on the stock market? We call that call, the company must first go IPO. We call it initial public offering. So when you hear IPO is called initial public offering. So you go on the market, but you have to go IPO before you can go on the stock market. It's a requirement. So every company that's on the stock market should have gone IPO. And what does that IPO mean initially? It means that the company has gone public. Public means that the books, the profit and loss, or the reports of the company is available to the entire world publicly to scrutinize. So because Fan Milk has gone IPO, you can go and download the annual report of Fan Milk and look at it. Because MTN has gone IPO, you can go and download the financial report of MTN and look at it, because they have gone IPO. Because ADB is IPO, you can go and download it and look at it. Because Google is IPO, you can go and download Google's financial statements and look at it. But a company that has not gone IPO does not owe you any responsibility to put their information out there. I hope I'm making sense here. So when we say a company has gone IPO, it means that their financial reports and everything is available for the entire public to read and go through, because the company is owned by the public. Why do companies do this? Sometimes the company needs extra money to run their business. So they come to you, the public, to support them with money to run the business. And before they do that, they must go IPO. And you give them the money, and then you own a piece of the company. So you become an owner or a shareholder of that company. I hope the concept is clear. We've looked at the stock market. We've looked at what stock or a share is. And we say that before a company can be listed on the stock market, for you to buy the share or the stock, the company should have gone IPO. I hope I've made that clear. Good. Now, this stock we are talking about, how do you get to buy it? Now, in order to purchase any company, you need the following. Now, every country with how their rules are being applied, but at least for Ghana, before you can buy shares or stock, you need the following of necessity before you can get. First is a CSD account. We call it the Central Securities Deposit Account. Now, like I mentioned, the stock market is regulated by a commission, and that commission requires that you have an account. Now, consider it's like your ID. So on the stock market, you have an ID that you use to trade on the stock market, and that ID is what you call the CSD account. So for you to qualify to trade on the stock market, you need a CSD account, which is a number that you have to use to buy on the stock market. Right. Now, you cannot go as a person. Second, you cannot go as a person to the stock market and begin to buy stocks. No, it's not allowed. So there's somebody who has the license who would buy on your behalf. So let's say you want to go and buy on the stock market, but you are not a professional. So you will tell someone that I want to buy 10 CDs of MTN, and that person will now go to the stock market and make the purchase for you. Now that person is what you call a broker. It's a licensed middleman who makes the purchase on your behalf. I hope we are making sense. So one, you need a CSD account. Then when you get a CSD account, you cannot go yourself and say you are going to buy stock from the market. You need somebody, and that person is called a broker. It's a licensed expert who is standing in the middle, who can make the purchase on your behalf. I hope you are making sense here. So that's the procedure. Now in Ghana, there are platforms that can serve as your broker, or banks that can serve as your broker. We'll take a look at them. There's one we call IC Securities, and we have Data Bank, we have the Plus app, we have a lot of other ones there. But there is a broker, a person who is your middle person who buys the stock on your behalf. Now your bank can be your broker, but not all banks are able to broker. So you have to ask if your bank can help buy stock for you, or you have to ask them if they are stock brokers. If they are stock brokers, then they can help you make a purchase. But not all banks are stock brokers. Only some banks are qualified as stock brokers. So if you want to use your bank, you might have to ask them if they are brokers or not. I know Cow Bank has a stock brokerage service. So if you have any other bank, your bank, you have to ask them if they are a brokerage firm before you can make the purchase for you. Any question over here? All right. Now, you must understand that as you enter the market and you have a CSD account and you have a brokerage or a broker who is making the purchase for you, you must understand that if you are going to buy stock and today they say the stock is 10 cedi, it does not mean that that price will remain the same forever. The price changes. The price in the market goes up and down at any particular point in time. Now, this is due to a lot of factors, but key among them are these main factors. Now, the price of MTN today, I think, is around 3 point something cedis a share. Now, it varies. Tomorrow you can go and it's 2 cedis. It can be 4 cedis. It keeps changing. Now, it changes based on a lot of things. One, company performance. If MTN is doing well, you see that the price will keep going up. Now, there's also economic factors. Inflation can affect the stock market, and a lot of things can affect it as well. So based on how a company is doing well or how the economic activities in the country are, a company's stock prices might go up or down. And then there's another key one we call market sentiment. Now, this is very crucial. Market sentiment is how people feel about the stock. Now, if everybody is feeling that MTN will do well, it will eventually do well. If everybody is feeling disappointed about EcoBank, it will affect the stock as well, because the stock is human beings that are trading them. So if the human beings are not feeling okay about it, obviously the price will come down. So there's something called market sentiment, which is crucial when you are purchasing stock. Once the sentiment is good, you see that the thing will start performing well. So these are the key things that affect stock prices you might want to pay attention to. The key here is that you don't go to a market expecting that today it is 1 cedi and to remain 1 cedi forever. That's not possible. The price must keep changing. The price keep going down or up based on what is happening in the market. So key to note here is that the stock prices go up and down based on what is happening in the market. It can be company performance. Now, this one that Donald Trump has said a lot of things about China and putting tariff on different companies. The stock market is reacting accordingly. Tesla stock has dropped rapidly because of what Trump has done or what Elon Musk has done. So, and the market is feeling some way about it. So the market sentiment is what affects the changes in things in the stock market. This is very, very important to know. Now, in the stock market, there are 2 ways you make money. There are 2 main ways you make money when you are trading on the stock market. Number 1, we call it capital gains. And number 2, we call it dividends. These are the 2 ways you make money on the stock market. Now, remember, you are trading on the stock market so that you can make money. And how do you make money? 2 ways. First, we mentioned, you know the market. You know they are going to buy a piece of the company. Now you go and you need a broker to make, you need a CSD account, then you need a broker, and you understand that the price will be going up and down. So you know that you buy it at a particular point. How do you make money now if you buy the stock? Now, two ways you can make money on the stock market. First one is called capital gains. The second one is called dividend. Now, capital gains is that you buy the company. I told the price is changing. So you buy the thing at 10 cedis, and tomorrow the price has gone to 12 cedis. So you can sell your stock at a new price, which means that if the thing you bought it as 10 cedis and you are selling it as 12 cedis, it means that you have made what? If you bought only one share, that means that you have made what? 2 cedis. And that's what we call capital gain. Are we on the same page? I take that again. Two ways to make money on the stock market. I'll take that again. Two ways you can make money on the stock market. Two main ways you can make money on the stock market. One is called capital gains, and the other one is called dividend. Now, capital gains is that you make a purchase at a particular price, say 10 cedis on a share or a stock, and then tomorrow the price is gone up to 15 cedis. If you sell it at that price, it means you have made 5 cedis. Now, that 5 cedis is what you call capital gain. Another way to make money is through dividends. Now, some companies, not all companies, some companies pay dividend on their stocks that you buy regularly. So, for instance, if Fan Milk is a dividend paying company, what it means is that every now and then, when they make profits at the end of the year and they declare their books, what they will do is that because they want to make their investors, remember, if you buy shares, you are an investor in the company or you are a shareholder. Because they want to make the shareholders happy or give them value for their money, they will calculate their profit and then they will share their profit small for all the people that have invested in the company. And that money is what you call dividend. Now, if you get a dividend, it does not mean that the money at which you buy the stock is gone. The money that you used to buy the stock is still there. But because the company you invested in decided to pay dividends, you are getting a piece of the cake. So number one, you can get money by selling off your stock at a better price, or money gotten from the dividend that is paid on the stock or the shares that you own in that company. Right? Take an example for capital gain. Now, let's say that you buy 100 shares in company A, all right, at 5 cedis per share, which means that you spend a total of 500 cedis to buy the share. Now, a few months later, the price of one share increased to 7 cedis. And then because you've seen that there's an increase, you decided to sell your shares, all your 100 shares. It means that you are going to sell all of them at 700 cedis. Meanwhile, you originally paid 500 cedis. So if you want to calculate your capital gain, it will be the 700 minus 500, which means you have gotten 200 cedis. Now, this 200 cedis is what you call your capital gain. I hope I've made some sense there. So that is what you call capital gain. So two things, you can either get money from dividend or you get money from capital gain. And this is the capital gain we have explained to you. Now, if you are trading in the stock market, there are a few things I like to bring to your attention quickly. One, there's something we call ticker or symbols, or in other words, you call it short code or whatever. Now, because company names are very long, or companies might have similar names, on the stock market, there's an identity for each company. So there's a way that each company is identified. They have a short code that used to identify them. So maybe if you know Fan Milk, Cowbank, GT, or if you go to the stock market, you might not find the exact name, but you see what you call the ticker symbol. And that ticker symbol is what you use to identify the company. It is important because sometimes you don't find the exact name of the company when you go there. You actually identify them by the ticker symbol. The next thing I want to explain here is called market cap. These are some of the things you see when you go to the stock market. Now, the value of the company based on the stock is what we call the market cap. So if a company is trading a stock at 200 cedis and they have floated 10 shares, then it means that that 200 times 10, which is 2,000, is their market cap. right? I take that again. The market cap is the value of the company based on the stock price. So a company is floating the shares and they have floated a number of shares and they have a value per share. Then it means that if you multiply the value per share basically by the number of shares they are flowing, you will get the market cap or the valuation at that point. Now there's another key thing I also want to explain, which is called price to earnings ratio. I'll talk about this again shortly. Now, let me just explain dividend before I come back. So how much you earn from dividend is called dividend yield. So when somebody is saying dividend yield, is how much they earn. Now, there's something we call price to earning ratios. Now, your price to earning ratios, usually it's a simple way to calculate how much you are profiting from the company. So it's a coin term that helps you calculate really how much you are earning from the company. Your price to earning ratio is your earnings per share divided by the price per share. So let's take it quickly. You buy a stock which is priced at 10 cedis. And when the company was paying dividend, they paid 2 cedi per dividend. So your price to earnings ratio would be the price at which you buy the shares divided by the amount that you are paid per share. That gives you the price to earnings ratio. And this means that because this price to earnings ratio is 5 in this case, it means that investors are paying 5 cedi for every 1 cedi of the company that the company earns. So it means that you look at it and see how profitable or how lucrative it is to do business with that company. That's what you used to derive, or you get this right. You calculate your price to earning ratio, and that tells you how much you are getting for how much profit the company is earning. So in this case, if you bought the shares at 10 and then they give you 2 cedis on that share, then you can say the price to earnings ratio is 5. And that means that for every investor, or investors are literally paying 5 cedis for every 1 cedi the company earns. That's what we mean by earnings per share. Now, briefly, I'd like to talk about the tools you can use, at least for Ghana, to access the stock market. Now, like I mentioned earlier on, you can actually go to your bank. If your bank is a brokerage firm, you can ask them if they broker stocks, and then they can help you set up your stock. You just need your CSD account, and then once you get your CSD account, it should be done. But we also have apps like IC Security, the Plus app. You can use them to buy shares as well. And also those who are interested in MTN shares, MTN actually allows you to buy shares on their star 170. But that 170, it's also MTN itself is not a brokerage firm. So they use a brokerage service, which is IC Securities, to help you do it easily. So that's how you can get to buy stocks from them. Finally, I want to talk about something that you should be aware of before you are trading in the stock market. Now, remember that those stocks can give high returns, but you can also lose value as well. We mentioned key things earlier on, that the price changes based on economic factors, market sentiment, or how people are feeling. This affects stock prices. So stock in short term is a very high risk investment, but research has proven that in a long term, and when I say long term, I'm talking about 10 years, 15 years, they have proven to always giving the right result. If you are able to spot the right company, then in a long term, you can make profit. Now, if you are investing in the stock market, you must go in for the long-term goal. And finally, you need to know that if you want to be consistently doing well in the stock market, you should be able to spot different companies that you believe will do well. You cannot invest heavily just in one company. The risk here is that if the company has a trouble, then it's going to greatly affect you. So what you want to do is you want to spot different companies and invest in different, all of them at different times, so that if one is doing well, you benefit. If the other one is not doing well, the benefit from the other one can also be of good benefit to you as well. I'll go over key things that we spoke about again, just so you get all of them again. I don't want to speak a lot today. We mentioned that the stock market is a place you go to purchase stock, and we said that the stock itself is just a piece of the company. But we say that before a company can be selling stocks on the stock market, they should have gone IPO, and that means that they have made their books accessible to you. And we also said that before you can go to the stock market and trade, you need a CSD account. And even with the CSD account, you need a brokerage firm. And we say that the broker is the middleman that makes the purchase for you. And we say that your bank can be a brokerage firm. But we caution that stock prices go up and down. And it's based on the performance of the company, some economic factors, and the way the company is, the market is perceiving the particular stock. We also mentioned that there are two main ways to get money from stock. We said that it's through capital gains and dividends. And we mentioned that capital gain, it is that you buy a shares in a particular company at a price. Then when the price increases in a later date, you sell it off, and the profit you get is what we call capital gains. But we emphasize that the company may decide to pay dividends on each share you own, and that is what we call the dividends earn. And we also mentioned that there are key things you should bear in mind when you're investing in the stock market. One, we said that there are tickers, which means that each company is identified with some symbol. You must know that symbol. We also said that there's what we call market cap, which is the value of the company based on the stock. And we also said the price earning ratio, which is telling you how much investors are paying for each, how much investors are paying for a 1 unit of profit that is earned or produced by that company. And we mentioned that dividend yield is how much the company pays you in dividend for your investment that you have earned on them. And we also mentioned that there are apps that can help you make the purchase, or there are apps that can be a brokerage firm for you. We said IC Securities. We come to this in details in another discussion, so I don't want to talk more about that. But we said that stocks are not fully smooth. They are high risk opportunities. But then if you can hold them for a long time and diversify your portfolio very well, you stand a chance of benefiting. Thank you. Any questions? If there are no questions, then we briefly have touched based on what stocks are. The next time everyone maybe would have gotten their CSD accounts by then if they go through the process, and then we can step by step go through how you can make some purchases, and then we start playing in the stock market. I'll leave the floor. If you have any question, please just raise your hand, and then you can ask if there's something that's not clear for you. Yes, please ask. Let me see if I have some rules on this as well.
Hi, Brian. Thank you very much.
Yes, please speak.
Yeah, thank you very much for the education. I don't think you touched on how to get the CSD account. If you did, then maybe I missed it. Please, can you go over that again?
So if your bank is a brokerage or a broker, you can engage them and they'll give you a CSD account. But if your bank is not a broker, you can download the IC Security or the IC Wealth app, and then you register, and then it will take some time. I think almost 3 weeks, and then they'll create a CSD account for you. Does that help?
Yeah, it helps. So what if you want to go the route of the *170?
So if you do that, still they'll start the process for you and ask you to create a CSD account to provide your CSD account. So it will take you back to creating it again. Yes.
Okay, thank you very much.
So the clearer way is to use the IC app. Then when they create it for you, you know your CSD account, and you can use it anywhere else to make a purchase if you want to.
Okay, thank you.
Welcome. All right. It's like everyone is clear. All right. Stan, you can speak. Oh, you are mute, so if you might have to unmute yourself before.
Okay. Sorry about that. Yes, I was saying. Thank you very much for the presentation. I got a bit confused when you got to the part about the P ratio and
Okay.
the earning per share over price per share stuff. If you could go over that
Okay.
more time. Thank you.
Okay. Yeah. The whole idea of this one is that the value here is that if you hear the price to earnings ratio of the company, you want to ascertain if it's worth your money. That's just the idea of the price to earnings ratio. So if I hear that the price to earnings ratio of MTN is 5, the question I begin to ask myself here is that, is it worth paying 5 for every 1 CD the company earns? So the idea here is that the company has invested some money, and then at the end of the day, I want to benefit from their investment. And the price to earnings ratio tells me that, okay, they use 5 CDs to derive 1 CD at the end of the day. I don't know if that makes sense. Though it tells you the profitability of the company. I don't know if you get it at the end of the day at a higher level. Yes.
Right.
Does that make sense? Yes. So when they say the price to earnings ratio of this company, you are thinking, well, if it's huge, if that ratio is very, very huge, which means that you see the denominator is smaller, which means that they are paying lesser, they are paying lesser on the shares that you bought. But if it's higher, you are seeing that, oh, actually, it means that it is, if you look at the ratio from the stock price versus the amounts you are earning on the price, if the denominator is getting bigger, it means that the price to earnings should be becoming smaller at the end of the day, right? And then that means that is more, you are benefiting more from the shares that you have bought. I don't know if that makes sense.
Okay. Yeah.
Yes. So yeah, I have 10 divided by 2, which is 5. But if it's 10 divided by 3, the value will go down. But that means that they are paying you more per each share that you earn in that company. Yes. Yeah, that's
right. So meaning the lower it is, the more
better.
you're earning.
Yes,
Okay.
yes.
All right.
So you look at it at a rough angle, you see that, oh yeah, this company there's a range that is acceptable. We'll talk about that later.
Right.
But once it's getting lower, you know that, okay, I can benefit more from this company. Yes.
Yeah. Okay. All right.
Yeah.
Thank you.
Okay. All right, Angela.
Hi, Bright. Thanks for the presentation. Please, could you share the link to probably downloading the IC security app?
Sure.
The one I'm seeing on it doesn't look. All right, thank you.
Yeah, sure. Use an iPhone or Android so that I know that. I'll share both of them. I'll share both of them.
Thank you.
On the channel.
Okay.
Okay. All right. Cool. Thank you, everyone. Go out there, read a bit more about. Now you understand at least overall what I would expect you to start doing. Start reading about some companies. I mean, in Ghana, I shared a list of the companies that are IPO in Ghana. So just start familiarizing yourself with them, understanding what they do, and then it will be leading you towards. You see, you can use public sentiment to tell if a company is going to do well. So just listen and read about them. You yourself, if you look at Ghana, which company do you think will do well based on the list you have received? Do you think ADB will do well? Do you think Benson Oil Palm Plantation will do well? Do you think MTN will do well? Like, sentiments can guide you at a larger level. Do you think Farm Milk will do well? Do you think Anglo Gold Ashanti will do well? That can just guide you on what to do. So start looking at that. And those who don't have the CSD accounts, please start going through the process. I'll share the app, and then you can start going through the process. Once you have your CSD account, and remember, there's no amount. You can buy any amount you want to buy at the end of the day. You can buy 10 CDs, you can buy 20 CDs. Just keep growing it. And you don't have to buy all at a go. Okay. Nobody says that you should go and buy 10,000 CDs of shares. You can buy 500, you can buy 100, you can buy 200, and you can always keep increasing it. Okay. At any particular. Yes, Angie, you can ask.
Yes, please. What are some of the requirements for creating the?
So I think now the Ghana card has become powerful. So with Ghana card, you should be fine. Yeah.
Okay, thanks.
Yes, so they'll just ask you some questions like your investment appetite, yeah, how much you earn and all that. But those are questions you can answer. Your location, I think you need your Ghana Post address as well, and Ghana card. That should be fine. Start it early because it takes some time to be ready. Yeah. Okay, cool. And hopefully with this same idea, you can also start looking at international stock, Googles and stuff. You can start reading about them as well. And hopefully once you practice, once you try one or two, you familiarize yourself with, you can make money on the other side. You see, when you buy a share in a company, you are sleeping. The MTN boys are going around shouting, and at the end of the day, they will pay you dividend. So why don't you want to take advantage of it, right? I don't get it when people don't want to buy stocks, because you are not the one going to be shouting for MTN when they are stealing people's data, and then they are squeezing their neck. Some of us are sometimes okay, because at the end of the day, when the profit comes, we wash it. So it's no problem for me at all. Okay, cool. All the best. I'll share the recordings once it's ready, and I'll also share the slides as well. I'll also share the link of the apps that you can use as well. Any question finally? If not, I'll make the recording available, so those who miss it can always make reference to the recordings, and I'll share the slides as well. So feel free to go through the slides if you have any question. You know most of you know my number, so if you have any challenge, you can reach out to me personally as well with any question you have after going through the slides. Then I'll respond. I'll take my time to respond as well. Yeah. Okay. Thank you, everyone.
Thank you. Bye.
Thank you.